Now, if you have been here before or here, then don't worry. You're not the first one, not the last one, and not the only one. So this has been probably the most important thing when it comes to trading and how it changed my trading. Now you can have the best strategy and still not be profitable and still lose a lot of money. So this here is probably the most important thing, and it can step up your game when it comes to trading so you can make money and finally become profitable as a trader. So now I'm going to show you how you can become financially free. Now a month has roughly 30 days, but if we are taking into account that we are not able to trade on weekends unless you're trading bitcoins and stuff like that, we are not focusing on crypto today but Forex, which means we don't trade on weekends. So we roughly have around 20 days per month to trade. So let's say we have 20 days and we take a trade each day, which means we have 20 trades. Now we want to win 10 trades and lose 10 trades, meaning since the market always gives us a chance of 50-50, we want a 50% winning rate. Now keep in mind that 50% winning rate is the best case scenario. It won't probably happen, but this is how we calculate just for the sake of the video. So now we have 20 trades and we want to risk $1 to gain at least $3. So if we win 10 trades out of 20, we have $30 winning profit. And if we lose $10 out of 20 trades, we lose $10. So the difference is exactly, our take profit is $20. So let's say we have an account of $100 and we risk 1%, which is $1, and at the end of the month we gain $20, which is a 20% win rate at the end of the month, which is pretty good. So now for that to happen, this is what we have to do. So we are talking here about risk management and money management, which is the most important thing if you want to make money and be profitable. So now if we take a look at the market here, we can see the market went to the upside, and here suddenly we see the market forming a downtrend, which means we see a reversal. So let's say our trade is around here. Now if you want to know how to trade reversals or a trend change, which means once the market reverses, we go with the trend. So here we would short. If you want to know, I'm going to link a video here or here of my trading strategy. Then you can find out how it works. But for the sake of the video, we don't need a strategy. We just assume the market here broke this area and this one. And here we can see it came back. So right around here, we want to enter our trade. So let's say we enter here and our stop loss is slightly here above the left side here, which would be or could be considered the left shoulder. So here we have a shoulder, here a head, and here now this could be considered the right shoulder. So this is our entry point, and now we see what happens. So depending of course on your entry and your stop loss, our first target, our first take profit would be around here. And now if we take a look at the risk reward, we would here have a 1 to 2, which isn't too bad, but again we said we want to have at least a 1 to 3, which would be maybe roughly the next structure right here. So here now we have a 1 to 3 risk reward. So this is our winning trade. And let's say we won this trade. So what we want to do now, once the market hit our take profit at roughly 1 to 3 risk reward, we want to go to the bigger time frames and see whether the market will continue to go further to the downside, so we can take more profit, so we can have a higher risk reward, more than 1 to 3. So here we take partially our take profits, but then we let the market run and see whether the market will go lower to the downside. So now we go to the bigger time frames. So now on the 50-minute chart, I'm going to add our EMA cross. In this case, I'm going to use the EMA cross between the 50 and 200. Here just quickly changing the colors. So now my 200 EMA is the yellow line and my 50 EMA is the green line. Now I'm adding the RSI and the MACD here as well. So now here I let the market run and see what happens. Since here is my 1 to 3 risk reward, I already took partially some profit. So let's see if the market can give me some more. So now I let the market run. And I can see here the market goes further to the downside. So now if I zoom out a bit, I can see here the market had a bit of a bullish structure, but here suddenly what I see is this trend line here was broken with the candlesticks right here, or is about to get broken. So now I can assume the market will probably go lower to one of the support areas right here. Here the wick came pretty close, so just let the market run. And I can see now this bearish candlestick where the MACD is suddenly below the 0 levels and the RSI below the 50 levels. Now what I want to do, I go to the past and check what happened previously. So now if I zoom in and here, so I go here to the past and I see what happened last time. Once we had bearish red candlesticks at the 200 EMA and the RSI was below the 50 levels and the MACD here below the 0 levels, and here I can see the market went lower. Here the MACD wasn't fully at the 0 levels, but I can see I had a little bit of wicks going to the downside, then the market moved to the upside. So here pretty similar, even though here the MACD wasn't at the 0 levels, but once it hit the 0 levels the market continued to the downside. So here again the market was above the 200 EMA, here came lower and went slightly lower, and here once the market turned green the market went to the upside. So here is where I want to exit at least. Here again red candlestick and then the RSI below the 50 levels, the MACD at the 0 levels, and the market went lower. So now if I go back to my current trade, so here I can see the red candlestick at the 200 EMA. So I assume the market will go slightly lower. So here once it hits here this support area, so here we roughly took the trade to hit this support area. So here is my exit. So this would have been a take profit of 1 to 6. So now instead of a 1 to 3 we have a 1 to 6 risk reward. So this is even if you win 1 to 3, sometimes you can let the market run to get higher take profits. And now if I let the market run, and just in case I want the market to continue to the downside, so here the market broke this structure right here. So now I'm waiting for the reversal, and here now I see the cross, so I want to exit at least here, which here would have been a 1 to 4, 1 to 5 risk reward. So here are now another example. Here the US Canadian dollar, we see the market went to the upside pretty bullish, and here suddenly we reversed, we broke here this structure, and then the market formed a potential reversal to the downside. So here, let's say right after this structure, again if you want to know how this strategy works, I will post a video here or here so you can check it out. So let's say we enter right here somewhere in the middle, our stop loss is slightly above this right shoulder, and now we go for a 1 to 3. Our first take profit is always the previous support and resistance line, or in this case the next one, which would be around here, and this would give me here 1 to almost 1 to 2 risk reward, but I want to go at least for 1 to 3, which would be around here, so this next support area. But now here we can see the market went further to the downside. So to know whether the market will go further to the downside or not, we again go to the bigger time frames. So here I'm at the 4-hour chart, and I can see here a resistance line right around here, which means here somewhere around is the left shoulder. Here I have my head, and here the right shoulder, and here the market went to the downside. So somewhere around here I can assume the market will go further to the downside to hit this area, this previous support line right around here. And now if we go to the 1-hour chart, here is my entry of the trade. I have here my free touch trend line, my free strike trend line right around here, which is slightly before my entry happened. So here I can also assume that the market might go further to the downside to at least here on the bigger time frame. So I am now going to the 15-minute chart. So my entry was roughly around here, and if I zoom out a little bit, here I can see something similar on the 50-minute chart. I have here a left shoulder, here the head, here kind of a right shoulder, and here a second right shoulder. So here I can assume that the market will break here. This last structure right here. So once I see here on the 50-minute chart, the last structure was broken with this huge red candlestick. I let the market run to the last support area here. And in this case, I would have gotten, again, 1 to 3 risk reward. Here we exit partially and take our profits. And here at the end of the day, we had a risk reward of 1 to 10. So this is why we can go from the lower time frames to the bigger time frames to know how to exit and how to take our profits, just in case if the market gives us more favorable indicators on the bigger time frames that the market will continue in our direction. So here it goes. And here now, if we let the market run, the market went even further to the downside. But again, here is one bigger structure on the 1 hour chart. So here is my exit. Again, we can see the market left even further to the downside on the bigger time frame. Here, this was the 4 hour chart, the last support area, which in this case would have been a 1 to 20 almost risk reward. But this is how you go from the smaller time frames to the bigger time frames, and this is how you can manage your risk rewards to get bigger wins.